Today we'll start like the balance of payment chapter. In this balance of payment chapter, we will study about how the balance is balanced in between the another country and our country. Like the balance of payment is record between the economic transaction happening in the one country and another country. It means like that. Like if we payment in the one country and they will pay the in our country, all the records maintained by the one's states is called balance of payment. Like we can say that also it is a record of economic transaction happening between the one country and another country in the term of the one trades, international trades in like export and import during the one financial year. In India it is maintained by the RBI. In the worldwide it is maintained by the IMF, like in International Monetary Fund. BOP is based upon a double entry account system, like the export of one country and import of another country. Like why we are saying that it is a entering of double accounting system, because like we can also record of the some amount in our country, and they will like different country also entering the some amount in that country. This is like a double entry na? Like if we are also entering in the amount and that person also entering in the amount, so we can say like this is a double entering accounting system. The component of BOP, there are two types of component of BOP. Like first is current in account, and another one is capital account. In the current account it also can be divided into two parts, like visual and invisible. Invisible like goods, ठीक, and invisible like services, factor of income, and unilateral transfer. Individual goods, invisible goods, we can goods see very easily, like when the rice, chawal, rice, wheat, makka, these color we easily visual. Okay, but in the case of service, in invisible, in the case of service, like in a service will provide like the something, like service can't be visual. Like the in factor of income we can't be visual, like wages, interest, and the interest and the rent we can't be visual. And the unilateral transfer, like the one word like unilateral. Uni means one and lateral means like one way, one in one line, is it transport. Okay, there's some payment one size. Right now, for example, in Nepal there's happening the earthquake na? India is giving them some grants like anudan. They will giving them some amounts. Okay, but the amount is can't return back to the India, like they will give it like in happening mood. So this is like unilateral transfer. एक ही तरफ से गया, दूसरी तरफ से नहीं गया, इसको बोलेंगे unilateral. Okay, now move to the second, capital accounts. In the capital accounts, like the investment loan or NRI. In the investment like FDI and FPI, we will explain for each FDI and FPI. Let me finish first, then after I will explain very detail and what is FD and what is FPI. Okay, in loan, sovereign and the commercial. Sovereign is provided by the government and commercial provided by the ECB. Okay, and the NRI accounts with commodities, donation, and gift. Okay, what is the like FDI? FDI like the foreign deposit investment. Okay, like the some country coming to India, they will invest. Okay, like the FDI, like in the FDI is for a long term, and FPI like the foreign portfolio investment. Like the some foreign country come to India, they will invest for the short period of time, and like the another country come to India, they will purchase some share for the some few times. Like they are saying that like that this company is increasing in a while, in the growing in very high level, they will come and they will invest some amount in that company. This is like the FPI. And the another name of FPI is the FII also. And the FI also called like the foreign portfolio investment. Right now we can difference between the both. What is FDI and FPI? Okay, and FII also can stand for the foreign institutional investment. Okay, FDI, like the difference between the FDI and FPI. Okay, FDI investment is another country right on the investment. In the case of FDI, if we invest some money in the country, they will write on the investment. Like for example, you are some investor in the Canada, or you come in India and you we invest a money in India in strongly, like you invested strongly with the help of government. and you want to make a company, like you will write down that company also now. So this is a FDI. Okay, and FPI is investment, but not right on the investment. In the case of, like, you are in the person of Canada, you come back to India and you purchase some share of 30 or 40%, so you don't have rights, you will only right to purchase a share holding. Okay, and in the investment, in the both listed or unlisted, in the FDI you can purchase a share on the listed and unlisted company also. But in the case of, investment in a company but share of profit making, like in the case of FPI, profit investment, just like some companies coming but they are coming for like the making the profit only. Okay, like the FDI, in the FDI case this is like the long term investment, like the Samsung is coming in India, they will invest strongly, they will come to a long period of time. But in the case of FPI, they will come for the short period of time. Inflow is stable capital, and in the case of FDI, the inflow is very stable capital, or inflow on unstable capital on the FPI. Okay, this is the difference between the FDI and FPI. Okay, now we will come back to like two parts of entering of FDI. In FDI, they will entering in two parts. Like the some company coming to India, like the Canada is coming to India. There is two method to coming in India. Like first is the FDI method, government route, and second is automatic routes. In this, in government routes, like the pay permission of the government. Obviously, if there's some companies coming to India, they give the permission to the government. It paid permission to government. But in automatic routes, there is no any permission to the government, they will come in and set up the company without any permission of the company. Okay, on the basis of the investment, like I will say that now there are two types of entering investment, like the FDI in the basis of investment and of the routes. And in the case of the FDI on the basis of investment, there are green fields and the brown fields. In the case of green field, they will come in a single company. In the like the in the case of example of in the example of Samsung, only Samsung is coming, there is no any other companies involved in this. Like this is green, the in the investment done by the only one company, there is nine other companies happening. This is a greenfield in FDI. Okay, but in the case of brownfield FDI, when the investment of continued entering was a double company, like the in the one country is like the India, another country of the like foreign country. For example, like Hero Honda, Hero is company of India, but Honda is company of the Germany. Okay, I don't know which Honda is company, which company. So this is like brown. You say, okay, you can consider example of Maruti Suzuki also. Okay, FDI in India, in the case of FDI, what is the percentage of India, like in 2022 to 2020, like 883.53 million dollar. Okay, and 2022 से 23 $70 million a share, 46% share equality. Okay, maximum FDI company countries: British 26%, Singapore 23%, USA 9%, and Netherlands 7%, and Japan 6%. Okay, Bank of Baroda example of the thesis. Top 5 factor of the FDI 2022 service sector: banking, finance, NFC 16%. Okay, now we will back to the computer software and hardware 50%, and trading 6%, telecommunication 6%, automobiles industry 5%. Okay, top FDI states: first is like Maharashtra, second is Karnataka, third is Gujarat, fourth is Delhi, and five is Tamil Nadu. And Maharashtra is 29%, Karnataka is 24%, Gujarat is 17%, Delhi is 13%, and Tamil Nadu 5%. Okay, and export and import in India 2022 and 23 total export like 770.18 billion dollar, and total import 892.18 billion dollar. Total deficit of India minus 122 $1 million. Like we in India in the right now is minus, like India is doing the lot of import, less of export. Okay, so this is a very bad news for us. Okay, the FDI limit on India: public sector 20%, in private sector, private banking at 74%, insurance 49%, credit control company 100%, white label 100%, pension 49%, agriculture sector 100%, mining 100%, petroleum 100%, defense municipality 100%, print media 26%, civil aviation 100%, railway 100%, telecom 100%, pharmaceutical currency 100%, e-commerce 100%, single brand retailer 100%, multi brand retailer 21%, and food processing 100%. There is like two, but like single branding retailer and multi branding retailer. Single branding system like the only the in the one building there is only one company is involved. Okay, there is no any other companies involved. Like the example of Samsung and iPhone, there is only iPhone companies mobile phone is selling. But in the case of the Reliance Digital, there are different types of companies selling the different mobile phone like the Oppo, Samsung, iPhone. This is like multi-branding retailer. Okay, a foreign investment facilitation portal. What is a foreign investment facilitation portal? It is the only single window portal to the territories to investment. This is under the DPIIT, Ministry of Commerce. Okay, current accounting convertibility, freedom to convert the foreign currency into the domestic and foreign currency into trade, export and import. Okay, in India the current currency is fully convertible. Okay, capital accounting convertibility, freedom to convert the foreign currency, vice versa capability. Under the Tarapur committee, the food convertibility is happening. Okay, there two times is happening, like the first time in 1997 and third 2006. These committees regarding the following conditions of capital accountability must convert. There are three: physical revenue, inflation, and financial sector. So this is like the BOP chapter is India. Thank you so much. You can read and revise at least one or two or four more times. Thank you so much.